Trump's impact on global markets will be profound and immediate. What does it mean for us here in Australia? The first 100 days of Donald Trump's presidency were always going to add volatility and uncertainty to the markets. And after the initial euphoria that US stock markets took from the promise of lower tax rates and less regulatory burdens, the reality of tough immigration and border protection policies and the consequences of protectionist trade policies has capped this rally. The US Dow Jones Index had risen over 11% from election date and broke the 20,000 mark for the first time in late January. But the focus has now turned to the impact of Trump's policies on interest rates, which must inevitably rise as the tax cuts supercharge US growth and inflation, and the impact on the US dollar, which had rallied on the growth and interest rate outlook. But with Trump now calling China, Japan and Germany currency manipulators, it is clear the new administration would prefer a weaker greenback. For us in Australia, this has pushed our Aussie dollar higher, so the Aussie remains in a broad 72 to 78 cent band, but we continue to warn a break on the top side is not just plausible, but increasingly likely, especially with the Chinese economy appearing less vulnerable after some more solid data this week, and the recent gain in commodity prices, which has just given us our largest monthly trade surplus on record at $3.5 billion for December, all of which should keep us out of recession for now. In other local news, business confidence and credit growth rose impressively, with the latest figures showing business conditions and confidence recovering well in December. And similarly, housing and business credit was up strongly at year-end, thanks to our record low interest rates and the booming property markets. Which brings us to the interest rate outlook. Here, it is very difficult to see the RBA cutting rates any further, not just because of the property market and the uptick in credit growth, but the latest inflation numbers, seemingly hand in hand with the Trump-inspired reflation around the globe, show an increase in the consumer price index and inflation expectations, with the forecasts that higher oil and energy prices may see an end to this extraordinary period of worryingly low inflation. And rest assured, like overseas, our central bank can't afford the luxury of low interest rates if inflation starts to rear its ugly head. So for now, we see the RBA on the sidelines as 2017 pans out, but we'll keep a close eye on inflation trends as well as the jobs market, which, if looking stressed, would probably be the best leading indicator of the RBA being even remotely tempted to ease rates further. And finally, the unpredictable Trump tweets will keep the markets on their toes throughout 2017. Until next time, that's the market update from Bendigo Bank.